Welcome to Take a Stock. It's the 26th of October, 2023, Q4. I'm joined by John. Is it Cashmere John today?
No.
Okay, well, just wool and John.
Cotton probably.
In fact, we've had a couple of requests, John. A couple of requests for you in the Christmas season, the festive season, to get into a Christmas cardies.
No chance.
If you could do that.
No
you
chance.
Must have some Christmas T-shirts or something.
I do not.
You do have some branded T-shirts, but they're nice. Anyway, welcome everyone. Welcome to Taking Stock. Feel free to comment on anything you want. If there's any charts, any companies you want us to look at, let us know in the comments there. And if you could help us out by liking and subscribing there, and also don't forget, download the Vox Markets app. It's free but priceless. You'll never look back once you do that. So we have to come up with titles every day. I do try to make it a bit creative kind of thing. And I thought today I woke up, right, and on top of everything else that's going on, sort of bonds dropping off a cliff and yields going through the ceiling there. You've got, war, horrible situation in the Middle East. You've got Ukraine going on. There's other wars on the world. And I woke up, there's this shooting in America and everyone's getting worried. Can it get any more gloomy? Is it possible to get any more gloomy? And I thought, well, we must be now, surely, at peak fear. And as Warren Buffett said, once said, best investor in the world. The trick is to be fearful when others are greedy and greedy when others are fearful. And it's a contrarian view of the markets. And that's the way we should. If you are really bearish at the bottom of the market, you're never likely to take advantage of the cheap, good value companies on offer there. And likewise, at the top of the market, if you're buying more at the top and you're greedy, that's a time when Warren's fearful. He starts selling off there. Right now, I don't know if right now, but maybe he's buying a bit more because there are companies out there at good value. So what are you at the moment? Are you scared at the moment? If you are, isn't that an opportunity? Because that's the way the stock market works, isn't it? You have to fix your psychology,
Yeah, I mean, it is very gloomy. It's very gloomy. The world seems a very unsettled place at the moment.
Yeah.
Which is, never the kind of backdrop you want as an investor. But, there is another famous phrase, Nathaniel Rothschild, going back to the start of the 19th century, buy on the sound of cannons, sell on the sound of trumpets.
Okay.
The idea is that the start, well, there are no trumpets yet. We just have cannons. But the idea of that was, buying, on the outset of war is actually a good time to start investing in markets. And it wouldn't feel like it, but it's, there is all sorts of geopolitical upheaval at the moment, which is very, very unpleasant.
Yeah, well, you say unsettled, it's unstable. I tell you what's very consistent, John, and that is the AIM share. It is down again today. Literally yesterday, I think it was like 21 days out of 26 has been down for. And now, literally 22 days out of 26. So it's good going, that. It's very consistent and massively oversold. Continue down further. I think it's now even worse on an oversold level than the COVID dash for cash crash. But, so it is gloomy-ish out there. But like I said, we have, historically, September, October are not good months for the markets, and they often chime with historics. Like if you go back, some of the biggest crashes happened in October, and they are the back end of October. And then you get this sort of rally then into November, sort of builds up, and then December is one of the best months of the year. So I do you know what? I keep saying it. It may sound insane, but when you think it won't come from nowhere, it does come from somewhere. When peak fear hits and it rebounds, and all of a sudden, people, as we've been chasing the market down and people start selling, it'll be chased up as well, and even more ferociously, because it's the oversold. That is nuts. That is honestly, that is an unbelievable drop. We're now like 49% or 48.9% down, 780 days on AIM all share. That's phenomenal, and that is, over time. Be patient though, but it will be a buying opportunity. Like I said, it's that's crazy. It's nuts, crazy nuts. I tell you. Anyway, let's have a look at the indices here. See what's happening generally. It's all down, everyone. All down. Ocado. Hey, John's favourite. It's up. Number one biggest riser. Ocado.
Thinking about the sort of broad index declines. There's a bit. If you look at the Nasdaq yesterday, that was down about 2.5%. Because there was mixed earnings news from big tech. Google got savaged. Microsoft did all right. But yeah, it's all looking a bit shaky, and obviously the fears over the US and rising bond yields, as you mentioned earlier, again are once again providing a headwind for markets, and we sort of get the tail end after effects of what happens over in the US.
Yeah, and
today was always going to be weak.
Yeah. No, but do you know what? I've also read that I don't know who it was, a billionaire investor on Twitter. I don't know if he's on Twitter. Someone's quoting him on Twitter, but he said the most amount of pain being felt at the moment is by the Fed, servicing their debt. They have 33 trillion of debt, and even servicing that at where they are right now, the yields they have to pay really is. And Jerome Powell said this is not sustainable. With the course we're on right, is not sustainable. So mark my words, they say higher for longer. They'll tweak that, like I said, to fit their narrative. But essentially what that means, yes, interest rates will be a bit higher than they have been in the last 10 years, but they've been zero the last 10 years pretty much. So they'll be higher, but they'll bring them down. I guarantee it pretty much. And anyway, comments, by the way. Ben, the markets are still being battered. Is it time to buy house builders or perhaps IUKP, UK Property ETF, to spread the risk over a basket of property companies? Maybe.
I don't know.
Edge in.
I don't know if in a sector like house building, I don't know if spreading the risk is going to make much of a difference. But because they're all essentially subject to exactly the same pressures, and the main one is interest rate sensitivity. The best thing you can say about house builders is that inflation is receding, so the cost of materials is starting to fall back.
That's the IUKP property ETF.
I don't know what's in it. I mean, does that? I'd have to have a look. But commercial properties, pretty nasty as well.
I mean, IUKD, which is a dividend pair, and that's even taking the hit. That's FTSE 250, 150. Look at the downturn. It's on but I mean, that is, of course, it's across sectors. That you get the old tobacco makers in there. I'm sorry, ethical investors. I don't normally invest in, but it's across. I think one of the biggest holders they've got actually is Anglo American, Rio Tinto, all the big. Well, in fact, the big dividend payers, the FTSE 100 and 250. That way they are. They're sector diversified.
I wonder how it's weighted. Is it weighted by market cap, or is it evenly weighted across all the dividend payers? I'd have to have a look at how that actually worked. One big dividend payer that's had a nasty bit of news days. Unilever shares down.
Oh, is it? That's what Unilever. You own those, don't you?
I do. It's all gone a bit. Well, it hasn't gone wrong. Still up. But today.
What was the problem then? What were they saying then? Because we said here
volume growth under pressure. Because people are feeling the pinch and trading down. I don't think the summer, the sort of summer helped. Ice cream is a big business for them.
Oh yes, I mean, let's look at the chart there. Yeah. And John, what can you see there? What can you see?
Ice cream
of a series of what?
Oh, don't lower lows, lower highs. I'm not a technical analyst. That one, that.
and in fact, on the web, look at that. And there's a series of higher lows there, and the rolling over. Where's the rolling? That's what you see. When you're a company, if you're in a company that's doing well, then when do you actually start to take the profit? Because you think, look at that there. I mean, that low. That's the high. It didn't break up higher than that. So straight away, you think, okay, maybe one time is not good, but a second low, you're thinking, okay, I'm going to get out here a second because it's not quite breaking. And
I guess, I mean, the main problem with Unilever, just from a fundamental analysis perspective, and I do appreciate your view on the chart there, is that, a lot of its growth, certainly over the last couple of years, been driven by pricing. Because the brand strength allowed it to push price increases through. But it now does seem that, the cost of living crisis being where it is, pushing price increases through is becoming harder and is really starting to, dent volume growth. So, Matt, I think what your chief financial officer announced as well. So, double whammy. Double whammy.
Yeah, double whammy. Look at that. You see a bit of support there, but it's today, it's broken down below that. How much is it down for you?
3% near enough.
Okay, yeah. But you know what? You say financials. I mean, I always look at financials first. I always look at fundamental research first. But you often say sometimes there's something in the chart playing out there. They sort of knew. Look at that. Why did it drop off? What happened here? It went from like in April 23. It went from this level down to here, and it. Why did that happen? in a few days, 11.4%
I can't remember.
in 46 days. So there's something that was happening there. You can see, share supply came in and beat share demand. And so anyway, Ben is asking something else. Which sectors will recover most quickly coming out of a long bear market? True, you will get the biggest bounce, the ones that really suppress the most sometimes. If they're massively oversold, you can, pick quality players in those sectors, and it could be a thing. Massive, Ben says, the massive opportunity, but have lots of losses to make up. Yeah, exactly. Don't patience. What I'm saying now, this is the opportunity it is, but it can carry on for a while longer, and that's why I think putting charts into is very good. You see the trend happening rather than just jumping in on fundamentals alone. Pair it up, use all the tools you have.
There is an interesting question around, when you should bail on a company that's losing you money, on a share that's losing you money, because you've got a long way back once the share has fallen. If a share falls 50%, to recover those losses, it's got to double basically. So So it is you're asking a lot when you're hanging on to a loser in the expectation you're going to make your money back.
Well, I do you know what that's that. I mean, if you look at it, if you're 10% down in a share, you need to get 11% back. If you're 33% down, you need to get 50% back. Okay. If you're 100% down, if 50% down, you need to get 100% rise in the share price to get it back. So I just think literally around about 20%. When you start getting that, microcaps can do it in a few sessions, but when you start going beyond 20% down, that starts to get a bit worrying to make up the distance there, the gain. So that's why an extra level of protection for me is, and I never go big straight away, because if I use, for example, a round figure, say 3 to 5% of the total portfolio value, no more than that, maybe I do about 3%, and it goes against me, then the loss is only small. So it's a level of protection I have there, So even if I've done the fundamental and the technical, and then the third level security is my portfolio management and my exposure to that, So hopefully, if I get all those three right, even if I go wrong, I can't take too much of a hit. Anyway,
I mean, from my perspective, I'm still in profit on Unilever. It's paid some nice dividends, so my absolute returns are actually boosted when it comes to the total return. So still, I'm hanging on to a profitable position. I did think when we were talking the other day about McBride and Reckitt that I should probably dump a few, but I didn't.
I keep saying that. I said years ago, honestly, it was like the bouquet. What's the name? What's in bouquet? From the bouquet?
Hyacinth bouquet.
Hyacinth bouquet. Like you wouldn't be seen dead with an own brand. But that was like 20, 30 years ago. You had to have top brands all the way. Oh, yes. It's like keeping up the Joneses and all that. Now it's not. They're good quality, own brands. And it's almost like you're a fool if you don't do it, because literally they're as good a quality and they're about 20%, 30% cheaper. So
But the other way to look at it is, I don't really like chopping in and out of stuff. I don't want to be a trader. So if I think a company's got good long-term prospects, then why not?
No, I'm bigger companies. I mean, but saying that, John, a trader, you've gone from that's a year there of uptrend. So only for years is decent. It's not short-term trading. That these trends last for a long time. It's just at the moment it's having a bit of a pullback. But
but I bought it, sort of where sort of July 20. No, it's quite early actually, maybe early in 2021. So had a bit of a rise, then a very long sell-off, and where would I bought it? To be in profit now.
Let me go back. Let me go back here.
But you have to, you're rough and smooth. So it fell for quite a while after I bought it and made it up. So there's the counter argument for selling when stuff falls out a bit out of favour.
I've never heard of Headlam Group. Ben said, "Can you look at Headlam?"
Floor coverings.
That's a horrible downtrend there, and it's nowhere near even uptrend there. So stand back from that.
I haven't looked at them for a while.
Like that. I mean, you could say, look at that. 1, 2, 3, 4, 5, 6, 7, 8, 20 odd days down, and the RSI. Let's look at that. Yeah, that's way oversold. But I'd stand back from that and wait. I mean, honestly, what you need to do is literally, if you like a company fundamentally, put an alert on it and say, if it gets above this level, say 193, you get alerted, and at least then it's back in trend, back up somewhere.
This is just looking at this year's forecast for Headlam. I mean, big drop in pre-tax profit. It's really struggling to grow that top line. And the earliest that earnings recovery is expected is 24. So yeah, there's a lot of headwinds for that. Inflation would have, the cost of production would have been horrendous, along with the impact of demand of the weakening economy on demand as well. Again, double whammy. We
mentioned yesterday about jumping into companies that I said trying to avoid most extremes, like a big fall off or big rise. Try not to chase those in either way. Try to go with small incremental trends, trends. A good example of that is Ethernet. I've no understand what's good. To my mind, it's going through, but because it's rising, people are jumping into it. And because it's a small micro nano cap, buying begets buying. But it was like on the edge of administration a month ago. And it doesn't make any sense. So, I mean, if you're jumping in that now, be careful, be very careful, because I think was it 90 grand they raised, which now is under question. I don't know what's going on there, to be honest. I haven't got time effort to look at it, but I'd just be careful with that, because literally, even though it's like at 3 million now, it's doubled or tripled in the last 2 days. They got no money. Businesses make losses, need money. So Oxford Metrics up there, second, good company that. Like I said, in that range a little bit, so need to break that. But good company. Upland still being followed. That's, like I said, again, I'm sure a couple of people aren't shareholders now gutted. They didn't accept that 14 pence offer, because where are we now?
Back we aren't back to where we started, are we?
3.8 pence. We turned down a 14 pence offer, apparently. So hang on. So that 14 pence offer. Look at that. God, that'd have been like from here up to here, and I can't see the upside. What would that have been? That'd have been 323% up. Just accept the offer in this day and age. There's a lot of stuff ahead of them. But unbelievable. Back down. Be careful chasing those. Okay. Contango. Have you read that, John, at all?
No.
Okay. It's they are a resource development company. They're talking about a potential asset sale here. So there we are. It's always Contango. I don't know why it's one of the most read, but it's again. Look at that. Without me even saying anything, we see what that is. Lower highs all the way down, lower lows. It's had a little bit of spike up today, but even with that, it's not above previous high. Look, so it's what else is on the most read here? Poolbeg. Have you looked at Poolbeg, John?
Yeah, we've covered Poolbeg. Yeah, it's basically no, Victor wrote stuff this morning. So basically, they've been working with an AI specialist called Cytoreason. Basically, to use AI to help them identify targets for drug development. And what the news is basically validation of the results of the work they did with Cytoreason. So Poolbeg has a very experienced scientific advisory board, and they've said, these targets look good. Move ahead. So it's sort of a really very very it's basically a validation of the effectiveness of AI as a way of sort of expediting drug discovery, accelerating.
It's a telling thing here. Look, you see this range is getting smaller and smaller and smaller. Sooner or later, right, that'll pop one way or the other, and they come out with good news, it'll pop up that way. So let's go into the webs there. So it's Poolbeg. What else is on the front page?
We've got a few bits up there.
BSCF. Essentially, they're going for now a new Cornier company. Set up a new company. I'm thinking, why? If you're a small company, you only have limited amount of resources, do you?
Yeah, I mean, it is a sort of technology. It's a technology company, really. So the first application of what it was doing was lab-grown meat, but the technology has multiple applications. It is a science company, and so to then take these bits of science through into commercialization, it does make sense to split them into separate companies.
I've seen Beyond Meat's chart. Look at that. That is obviously the poster child. I mean, did you see it? Like it 5 bag, didn't it? I think it came in at when it listed back in 2019 now. Beyond Meat, but listed literally, look at that, $45, and it went up to $218, and now it's back at what, $5? God, it's back at $5. Anyway, that's the I do like this area, and I do think it'll be huge in years to come when it's like for like. It's one of those things. It's like EV technology. Once the price is the same, there'll be a no-brainer switching over to lab-grown meat because ecologically, it's ethically good and it's even better for you. They can add some things. But here's BCF.
Yeah, remember this one was again. Look at this chart. I mean, this went ballistic, and back. It's almost back where it started.
Bouncing off this level here, down again. Yeah, so that isn't a bit of a. It needs, even here, you see maybe some resistance there. So maybe it needs to get above that sort of.
It's definitely an interesting company, but
I do like technically that. It's just at the moment the commercial when you have the poster chart Beyond Meat, struggling a little bit. You think, okay, if they're struggling, and then
Beyond Meat is slightly different. No, that's basically synthetic. Meat. It's not lab grown meat. It's.
Oh yeah, it is. Yes, you're right. You're right.
It's fake
you're right.
meat, basically.
Yeah, fake meat. Yeah. Okay, yeah. You're right. Absolutely. Sorry, I apologise. No, I do like this tech. I honestly believe. I a while back I invested in Agronomics a long time back. But I felt I love it with them a bit because investing in companies, raising money, investing in companies. Oh, what's the exit here? So I got out, but Agronomics, and that's all about that. And I actually did a video on it saying, to me, it's a no-brainer. Why would you go in the supermarket in about, say 5-6 years time, if you've got lab-grown steak there and normal steak, and one is healthier, same price, tastes nicer, doesn't kill animals, it's better for the environment. Why would you go for the one where animals been killed? I mean, to me, it wouldn't make any sense. Just, but Agronomics, look at that.
You get this inevitable debate. It was probably best left for somewhere else.
But even ecological, environmental it's right. It works, and even health wise, it's no no sort of antibiotics put into it and all that stuff. So it just makes it on all levels. It's a no brainer. You know what I'm saying?
Yeah.
Okay. Anyway. Okay. BSF. Anything else, Mosman?
What did we cover? We've covered Hummingbird. We covered.
Oh yeah. Hummingbird is in fact I think one of the fallers today, isn't it?
Yeah, I mean,
Oh, it was one, but it's really bounced back up. But the numbers. What I look at is, look at this numbers. What's the numbers? But the gold, if you look at gold, it's rallying at the moment. It broke 2,000 a day. So maybe that's bounced back because of that. Because with gold, there we are.
Yeah.
You can see see that downward trend there. Look at that. There's an example of breaking a downward trend channel there. And breaking the support, so it needs to get above this. It's been there before. It needs to get above 210 maybe gold, but it's a nice bounce on just global worries, isn't it? Isn't that what it is? I suppose.
Oh, for sure, and absolutely safe haven investment.
Yeah. So go on. Sorry, Hummingbird. Sorry, go on.
No, I mean production's up at its main mine, which is Yanfalilu, if I can pronounce that correctly.
Yanfalila.
It's ramping up at the other mine, Kurusa. All in. Costs of production are falling, and that's something which I think has held the whole gold mining sector back, is this elevated cost of production.
All the same, yeah.
So it's generally okay. They do refer to some challenges they've had in ramping up production, which basically training and weather being another thing. But they're sort of sticking to their production guidance for the year.
Yeah,
and their sort of longer term guidance, and that then helps them reduce their debt. So it all looked reasonably good.
Good. Yeah, exactly. And if the gold price goes up, well, look at that there, right? For a long time, it came in a downtrend, and it just looking at that resistance there, didn't quite get above it. Then it broke it nicely here. It came back down, broke nicely, and you can see what you want to do is to finish the day above that previous resistance, and then up it goes, and then all of a sudden it comes down again.
I would suggest that. I mean, they've got some reasonably punchy forecasts out there in the market. I can get them up. So maybe the reading is that they're not going to hit them.
Okay. Peak fear. Supermono says peak fear is watching England play England cricket team.
Oh God, they're playing now, aren't they? Are they playing now?
Individual construction stocks I like are Crest and Head. Well, Head, stand back from that. Crest Nicholson, is that right?
Crest Nicholson, house building.
CRST. Let's look at that again.
Oh, that's a figure today. Alumasc is involved in. We covered today.
Okay.
They had trading update.
Crest again. Honestly, stand back from that for a while. It's a Alumasc. What do they do?
What do Alumasc do? Basically, house building products.
Oh, okay.
So. Water management, which I think you can call guttering and piping. Any sort of metallic products used in house building, and sort of other areas of building. So, you know, they would have been held back a little bit by the sort of house building slump we've seen here. But the update today was pretty solid. Pretty solid. I mean, that chart looks a lot better than most companies in this sector.
Yeah, well, you can see it's come down, and now we've hit this level, and look at that level there, 130. It's retested in fact a little bit of higher low there, but still in a little bit of a range. Needs to break up, but yeah, it's a lot better. I mean, let's try and find a chart, a trend here, uptrend, because we haven't seen it yet. So let's have a look at. What I want to say is one of the most read. Where was it? No, one of the. In fact, the fall is here. Safestyle again.
This again, I mean, another building materials.
Yeah.
This one is Windows.
Process update. Oh, it's an exciting RNS, isn't it? Processes are updating.
I think when we're talking about process in the case of this company, it is a process designed to keep it solvent. Yeah. So quite exciting. So yeah, it's in a pickle. Yeah. It's in a real pickle.
It's in a pickle. I love that phrase. Argentex
comes up a lot at the moment.
I used to own this, and I made a nice, pretty coin on this. And the figures were knocking out of the park. And in fact, I was trying to find out where I got it, AGFX, but they came out the results before last, and I thought there's something not right here. And literally, I bought them. I think, in fact, I was free when I bought them, was across the 50 moving average, and they gapped up, and. They started. They came out with figures, and I just got out for something. I don't know why I got out, and the figures were weakening.
I mean,
but today they announced Harry Adams, who was front and center of the company a lot, doing a lot of interviews. He's very promotional. I mean, not in a bad way. You know, very professional guy. And I said, Harry Adams, CEO, has left the company with immediate effect. I did say on Twitter, sometimes in your investment thesis, you can't plan for certain things. You look at fundamentals, forecasts, you look at the market, you look at the charts, you look at cash flow, you do all that. But what you don't plan sometimes is just a CEO who's very active, just stepping down or leaving straight away. You think, oh my God. So the only way you can protect against that is portfolio management. You know, not overexpose yourself to one company, because you don't plan for that. Now, if you hold like 50% of a company and that happens, it's gutting, isn't it? If you take the 25% hit in one day, oh my God. So, but if you take some less than 10%, it's fine. But I thought, what's going on here? You never actually find out the reason why CEO steps down. It happened to me in Destiny Pharma a while back. They never tell you in the end. But I mean, there's a clue here, I think. Nigel Railton, chairman, commented, we have recently conducted a review of Argentex strategy. Okay. And I've identified a number of areas to focus to ensure continued growth of the business. So to me, that's where the clue lies. Where's the growth gone then? To ensure the growth. The growth, to me, seemingly must have stopped or slowed down. And they're saying they want to ensure the continued growth of the business. So they're saying what maybe Harry is doing wouldn't ensure that. But Jim is coming in. Harry and Jim. They're two English names, aren't they?
Well,
Harry's down, Jim's coming in. Come on, Jim. Harry, get out.
Well, I mean, just sort of going back to you mentioned Destiny's Child.
I'm a survivor.
Destiny Pharma.
I'm going long, Destiny's Child, particularly Beyonce.
Yeah. So yeah, I mean, they've now brought in a very experienced chief executive who it really does look like he's the man who will take that company to serious heights. And again, in Argentex's case, the new chief exec, Jim, or certainly the interim chief exec, Jim Ormond, is a very, very capable chap.
He's done
some serious things before, and he's current chairman of Gusbourne, the English winemaker.
I looked at why are winemakers so expensive? Their value is crazy. But anyway, look at that. I mean, you can see there, all of a sudden, I know I'm boring you with charts, maybe, but it's worth paying attention to them, because you can see here, this high here, it didn't get above that, okay? And the next high was from 140, it went down to 128. It tried to get it back out to 134 again, didn't get it back down there, all of a sudden it started going down. You're thinking, what's going on? And even that line there, which you could say roundabout sort of 110, £1 with support, gap down below that, which is a little bit telling.
But there has been
Gusbourne, look at the Gus. I looked at this earlier, right? I thought, okay, I do like the idea of English wines, because honestly, I don't know how I slipped into Radio 4. I was driving to, I think, Wales, and Radio 4, I was flipping around. I was sick of Destiny's Child. I'm a survivor. So I went to Radio 4 and I thought, okay, let's have a listen. And they talked about English wine. And they were saying that the climate has helped them massively over the last 20 years. Now the grapes are sweeter, and you can't deny that. That is climate change. These are growers of wine who've been doing it for 20 years, and they say it's been getting better. The seasons are longer, the harvests are better because climate is slowly going up. And so Gus, anyway, Gus, I look at Gus. Okay, so let's look at the value of this. Gus is the old. Is Gusbourne. It is like a nice English wine. Ooh, Gusbourne. Ooh. So I looked down harvest report, and they say here the harvest is now complete. It's our biggest yield to date, which is very good news. I thought, okay, good. Abundance of high quality fruit was harvested under sunny skies and earlier than in typical years.
Well, we can see that around here in my rural surroundings. A lot of the wheat was harvested very early this year because it was hot as hell.
Yeah, so I thought 45 million market cap. Let's look at the value of this company then. So went down. Strong sales was 24% at 2.3 million. So even if let's say 5 million for the year, that's still 9 times sales. That's not cheap. That's not cheap. And I thought, okay, net debt of 15.2 million. What? Oh no! I'll just drink the stuff. I won't invest in it.
Yeah, well, no, it's a growth area. It's growth sector. You've got Chapel Down as well.
Chapel Down is the one.
Interesting. Anyway, we digress. We were talking
yeah.
about Argentex, and I'm looking at forecasts, and they're still all right. So the growth is still in the forecasts. So maybe what the market is also seeing is that the numbers that are out there are no longer going to be hit.
Yes, because I think
not just about the departure of the chief executive, that why the share price is down.
Yeah, yes, because I think what they'll have to do is announce formally if there is a downgrade. Obviously, the brokers can't do that before they release the figures officially, because otherwise they're inside, so they can't do that. So they'll have to release the figures officially of a downgrade. I'm not saying it is. I'm just saying I'm suggesting because they said to ensure future growth. To me, that says something's gone awry with the growth. So I'm just surmising there. But
because we had CAB payments the other day, didn't we? That was again, foreign exchange. Maybe there's something that it's like there may be something going on in the broad foreign exchange sector.
Well, that's what I was worried about. I own a couple of shares of look at CAB payments go. I own a couple of shares of the smaller Cornerstone FS, which is knocked out of the park.
Yeah,
they've done really well. But we've seen quite a few.
But coming from a smaller base, which makes
exactly
with a different focus and a different way of scaling up the business.
That's what I thought. I thought, well, maybe the earlier stage is smaller, so they don't need as much growth and momentum going forward. But cabs, it still isn't really bouncing. They have third day of dwindling. And in fact, let's quick comments here. Let's look. Interest rates prediction. Where is it going? That's what Gregory says. I think they'll got to keep it on hold now. I just don't think the economy. In fact, an MPC member said we're only feeling 20% of the rate hike so far, 20-25%, round about that level. So it's going to get harder for businesses, and you will have that October last year figure drop out of the CPIs, which was a high figure last October. So that will bring it down naturally. To around about 5% anyway, or 5.5, and then you'll have interest rates around about the same level. I'd say it's Paul Hill favourite kicked out the CEO. It appears Mr. Market doesn't like it. No, he doesn't like that. What's the yield on IUKD? It's around about 6% at the moment. Just over 6.5%, I think. IUKD. England 156 all out. Mr. Steve. Okay, so that was why you
not been a great tournament. Not been a great tournament for England. I missed some things here. Okay, this is Song have rejected portfolio sale and other management proposals. Yeah, I don't know. You even say that. How do you even say that? Hipgnosis.
Is it Hipgnosis? Why do they spell it like that? Is that
I don't know.
It's spelled Hipgog.
This is a remarkable story here. So there's a few of these companies got over Round Hill Royalties, so
they buy up back catalogs of artists, and then they get royalties on the play of those. An income stream. But what's going wrong here is there's going to be less payments coming from them, isn't it?
Well, there would be. You've got two problems. They spent a lot of money on these. These back catalogues in an environment where the interest rate was much lower, so the value of those royalties into the future, the cumulative value of those royalties, was worth a lot more when interest rates were low than it is when interest rates and inflation are high. So you know, they were in the absolute, you know, center of the firing line of the sort of the inflationary effect on you know, discounted cash flow valuation.
Are they going to be a survivor? Because you always see that, you know, about you know, the artists selling their back catalogue for millions and millions. Wow, I do that. What do they hang on to them for? They can still play their own songs. So, you know, it's like not a big deal. So yeah, I definitely do that. Cash in on your own artistry, talent. Sell out.
But it's, I mean, I love music, but the music industry is not known for being you know, anything other than a fairly cutthroat business with some fairly interesting characters knocking around in it. And it's one that I've always avoided as a result. I mean, strangely enough, this brings us back to Destiny's Child, which there used to be a company called Sanctuary Records. Which
I think I shares in those.
Yeah, which you may remember, and I think it's the manager of Hipgnosis has had something to do with Sanctuary. Okay, but they got into bed with Beyonce's father, if I remember rightly.
Whoa, it's a big bed.
Yeah, and it all seemed to go a bit wrong from there. And I think Sanctuary.
If you had to get in bed with one of the Beyonce family, it wouldn't really be Beyonce's father. Let's be honest, other choice. Okay. It's like so. ENET recovering on CEO guaranteed current costs 2020. Okay, it's a risky one. I'm saying invest in, try and find a business that's improving. That's I mean
Kromek. If you want some good news today, look at Kromek.
Okay, I'm sorry. Head ex dividend. Yeah, but Ben, they're down massively on the. All I'm saying, maybe a good company. You said Head CEO is doing a good 100 million of freehold property. They have a very good balance sheet. Will be good recovery. Yes, but honestly, just pay attention to the chart a little bit. Honestly,
yeah, the chart. But then actually, then if you dig in, and you know, I'll have a look at that because if you know, if you do have strong asset backing and you know the company is in a fairly solvent position, then you know, you may find that is just sort of genuine Ben Graham value type situation.
Yeah, but Ben Graham, by the way, rewrote his book about 10 times. All right, and he tweaked his. You've got to be a good investor. You keep tweaking. Now, I'm sure with the technology that offers by charts and just the probability of buying stocks going down with that is go with momentum. It's money flow. There's no more pure, you know, evaluation of a stock than the money going in, going out of it, and that is exactly what's happening. Money is coming out. Don't fight that. Honestly, you'll be in a paper loss for a while.
That's true, but then things do have intrinsic value.
Yeah, I know, but if people are not willing to pay for that intrinsic value, it'll keep going down.
But that's sentiment. Fine, you know? So, you know, there are two factors.
All I'm saying is, fundamentals, yes, that's the first biggest tool you use. And then it's like, you know, if you're in a DIY tool, bag of tools there, you start off with a hammer, okay? That's the fundamental thing. Then you start to get a bit more picky, fine-tuning, get the screwdriver out. That's when you look at, use all the tools available. That there, stand back. It's nowhere near an uptrend. It keeps gapping down, and you can find yourself a lot lower than that.
Yeah.
You keep getting cheaper and cheaper and cheaper.
Stick it on a watch list, you know, and you might miss out on a jump one day when sentiment does improve. But you know, something has intrinsic value. You know, the market might not recognise it for some time.
Yeah,
if sentiment remains poor. So, you know, actually, I agree, Justin. Combining the two approaches is where you want to make.
No, I always go with fundamentals first. Always, because you can just trade a chart and you can be trading something that's insolvent and go bust the next day. Fundamentals always lead technicals, but you know, essentially you go. Okay, sorry. Someone say else, John. What was it? Quickly.
Oh, Kromek.
What do they do then?
They are in
KR. Yeah, I know Kromek. They are in sort of.
Yeah, they're in the defense space. So but this is, I mean, I say this is wonderful news. The shares are up 12%, but then, you know, going back to the initial discussion we had about peak fear, this is a contract for biological security by the US Department of Defense's Weapons of Mass Destruction Division. So lovely stuff. Lovely stuff. Big old contract. You know, really helps their revenue visibility.
I interviewed these a few years back, I think, and they got convertible loan notes there. And I was just worried about the cash burn, and in fact, the valuation is a lot higher then actually. So now they're probably better value of money for revenue increase. What's this? Finally, is it? Yeah. So growth there, 17.3 million, but they are obviously loss before tax was 7.3 million.
Raised a bit of cash.
Yeah, they've raised a bit of cash. Yeah, but again, you know what? Look at that. You know, they could have said they were cheap up here, but they keep coming down. But maybe now, sooner or later, they'll get to this level where some people saying that's great value, and then they'll bounce and rally, and they get, what you want to see is almost get above this previous high. I mean, above these support levels as well. It broke down. But I do like their technology, because they do land some big contracts, and look at that. Actually 1.5 there.
I bought some shares yesterday, by the way.
Oh, hang on, ladies and gentlemen.
I could talk myself into it on the show. Yeah, I bought some Angling Direct.
Yes, okay.
A little nibble on the bait. It was too tempting.
Well, there we are. This is where I think you pay attention to the chart as well. It's been down from 89, 90 pence there. It was back in 2021, and you could have gone all the way down again. I think angling is great. Angling is going bigger than popular, all the way down to 24 pence, and then now you can see there nice level of support, higher, lower highs, and it's rallied strong with the RSI. You sometimes get the RSI peaking out a little bit, so it needs a cool down. That's quite good though. It's bouncing now. Yeah, and what it needs to get, if it gets above these levels, I mean, nice now. You're back in an uptrend there at 38. We're not far off that. But yeah, you can see there the downtrend. If you want to avoid one thing, range is not too bad, like I said, if you're being paid dividend. But if you want to avoid one thing in small caps, nano caps, micro caps, avoid the downtrend, because it can be very painful, and you can be sitting there for a long time thinking this is great value. But if you look at your portfolio, it's not really. Yeah, it's wiping your portfolio value out. So I kind of this was you've got a decent cash position. Decent growth forecast. There was a very good observation on the YouTube channel itself, suggesting that the worry is the European business, because there's a lot of price competition out there, and it's still marginally loss making. Okay. And there you go. But the loss making was as the comment also pointed out, significantly reduced, and the company is growing there. So I like it. It's got a sort of very strong UK position. It's a hobby I think a lot of people are getting into. Yeah, is fishing the new cycling? But yeah, I like the look of it. I like the look of it. A lot of numbers that tick the boxes for me. Yeah. Yes. Was there anything else I want to look at? Is there something? Just quick. So we looked at that. Hellenic Hummingbird Standard Chartered. See what's happening there? That's a telling sign of the Far East, isn't it? China. Standard Chartered Bank, of course, is its main customers in the Far East, China. Yeah. And that today, look at that today. Standard Chartered, gap down. I mean, it's not altogether surprising. What I'm surprised about is that the market hadn't discounted those concerns slightly sooner. But the Chinese property market is in a real state, in a pickle. Oh, it's knackered. I think it's more than a pickle. Yeah, you often wonder, did they do a trading update? Because look at that. Look at that. Since I say high there, and 1, 2, 3, 4, 5, 6, 7, 8 days down. Yeah, didn't we? I mean, isn't this where we started to see some of the big Chinese property groups really starting to run into trouble? Oh yeah. Olive Garden and all that stuff, and Evergrande. And, exactly. So Olive Garden's gone rotten. Olive Garden, Country Garden. Oh, Country Garden. Yeah, sorry, it's gone rotten. What else is there? Anything else? That's funny, isn't it? There's a lot of news out today. So any other comments? Song, yes. Check out uranium price chart. Yes. John, don't get John started uranium. He loves it. He loves uranium. He has it for breakfast. Holding in fact, John, we've Geiger Counter. Geiger Counter, I think, is the play right now because the uranium price itself. Yellow cake box. Yellow cake. Well, you don't want to buy uranium from cake box. I know yellow box in it somewhere. Yellow cake was flying because, as I said, a direct investor in uranium. Geiger Counter is an investment company that invests in uranium producers, and I guess the reason you might defer to those is that you could buy into uranium at a discount to the value of those miners. There we are. Whereas that chart is yellow cake. That's a cracking rise there. So that's one of the uranium plays, and that's done what? Oh, I can't see that now. 304% in 1,300 days. Extraordinary. Let's go. Let's go Geiger Counter GCL. Oh, by the way, it's not been as impressive. It's been up and down a bit like a Geiger Counter. But this is the sort of difference between buying the commodity and buying the companies producing the commodity. By the way, one of the big hope pipe potential stocks was Greatland Gold. People will come back with gold today rising. Look at this. It's a very interesting chart. I'm not saying it should rally, but you're starting to see now. You see, you could have bought that way down. You start to see now lower lows there, and then it's starting to try and break up from this downtrend.
Okay.
So I said, but if it gets above 8 pence, maybe it's maybe a goer, but it's trying to with the gold price. It's trying to get up there, But
okay, so here's a thesis. A thesis on gold.
Yeah.
Would be that gold itself is in demand because obviously people are very worried about the geopolitical situation. The thing that had been holding back gold producers was costs, rising costs, inflation. But inflation is receding, demand for gold is rising. You might actually, start to see more of a virtuous circle for gold miners.
Oh,
there's a sector call.
Yeah. Okay, gold. What are the gold? There's Hummingbird. There's GGP. They're not on my GGP yet, but there's what else is there? There's another one. I think it's Shanta Gold.
I tend to go for the producing ones, to be honest, as well.
Isn't Shanta a producer?
I don't know if it's. I must have looked at it, but
I know.
But I'd get
Who's a big
producer
producing
gold miners.
Who are they? I don't know really.
I don't know. Let's come back and have a look at it.
The one in America,
off the top of my head. Too much in my head.
Okay, so let's go quickly. So just finish off comments there. Do roller stocks beat miners? I've been at a chart showing Franco-Nevada beat Barrick Gold. I was thinking about Barrick. I was thinking it's not listed. It used to be listed in the UK, didn't it? It's not anymore. Just in New York Stock Exchange.
I think you have got over here. Wheaton Precious Metals is quite interesting. It's dual listed. It's a big Canadian company. We actually spoke to the chief exec. On Vox, and it might be worth going to have a look back at that. But that's a mining royalty company. Streaming, they call it.
Yeah.
So
sorry, a couple of comments there, John. First one is said this is from GB. Said Beyond Meat is a bargain if it doesn't go bust. so they said cashmere on tomorrow, John, and yellow cake for lunch. Yellow cake may go straight through you if you don't tuck into it.
Nice.
Okay. Ignore all that. So anything else? Sorry. Go on, John. So you're saying there. What are you saying?
I can't remember. Wheaton Precious Metals. Have a look on the website. It's
okay.
Precious Metals. Wheaton Precious Metals.
Okay. Look at this. So this is a UK public inflation expectations continue to ease in September. I looked at this first of all. Okay, here we go. And so the British public's expectations for a year ahead of inflation continue to ease. So what? Asking the average old lady on the street, what do you think the prices will be like in a year's time?
It does matter. Down? It does matter.
I think they'll go down
because it's behaviour. Understanding public opinion means you understand behaviour.
I don't know if they'll change their mind if it does go down. Oh, I didn't say it would go down. It's gone up, hasn't it? Yeah.
Wisdom of crowds. The wisdom of crowds.
Did you see this on Twitter? Right? They didn't realize they were live. 10 Downing Street, their Twitter account. That a guy standing in front of a mic going 1, 2, 1, 2. They kept doing that for ages. Right? And they didn't realize they were live. And it was just the mic was distorting. And this happened in the previous press conference. Then they talked about AI, which is cutting edge technology. And they went live, then they cut that off, delete that feed. They went live, and the mic was still distorting. They can't even do a mic test at number 10. They're talking about cutting edge technology. How on earth is this office running the country? They can't even get their mic sorted. They're talking about cutting edge tech. Anyway, the UK set the first AI Safety Institute. There's also 30 million of innovation going into the NHS. I don't know.
That
is it?
I mean, AI is, both threats and opportunities, like all sorts of new technologies. But yeah, the money going into the NHS, I think, is actually into NHS tech. I mean, as I've said before, you need to digitize the NHS. Lots of really good.
Do you think the irony is lost in there's amazing technology creators in this country, and you've got the top office of the land not able to even sort out a microphone?
Wow!
Literally, they did a live feed. They didn't even know they were doing it. And they're talking about cutting edge technology, and they're in charge. These guys are in charge. For heaven's sake, we haven't any chance. UK car makers recorded their best September since 2020, but warned growth is under threat from new Brexit export rules due to come into force. I think the EU and the UK will work something out there because you've got to have, I think, 40%. What is it? Something like you've got to have under the measure, 45% of the value of an EV must originate in the EU or UK to avoid it being done. This is quite clear. The industry body said the rise was driven by 30% growth in exports.
Yeah.
Almost 6 in 10 vehicles going to the EU.
We are a massive car exporter.
Yeah. And
it's very surprising to a lot of people.
Yeah, output of EVs sold by 41.5%, because you have to know the figures there, because going from a small base, that's not a lot. I mean, I'm sure Rishi didn't help that when he said we're now extending the deadline. Imbecile. Sorry, I think they're all imbeciles. They're not in one way. I'm not sort of in favour of Labour either. They're all idiots. Anyway, on that note, thanks for watching, everyone. If you did enjoy this, please probably give a thumbs up, share it, like it, and don't forget this is a free service, okay? And the app is free, and you can download it for free. And honestly, you'll find amazing value in it. So please do that. The Vox Markets app, and I think the same time, same place, different stocks, different prices. I guarantee, though, one thing's a constant: the AIM all share will be down.
One day.
One day we'll have a celebration, John. We'll get party hats out and everything when that starts going up. Marvelous stuff. Thank you, everyone. Speak to you tomorrow. Bye.
Tomorrow.